Not long ago, there were 4 friends: Nova, David, Keiko, and George, who lived on the beautiful island of Oahu. Besides working at the same hotel, they often surf Oahu's north shore. After hitting the waves, they would get hungry from all that exercise, so they hungered for pizzas. David would make pizzas from leftovers, creating interesting combinations of street food and pizza. One of the tastiest was the Huli chicken pizza, made with Huli chicken and other local ingredients. One day, after a really good pizza, Nova joked David should sell his pizza. The discussion eventually turned somewhat serious, and the 4 decided to try selling David's creation in an open market booth. George creates a spreadsheet to keep track of their project. He explains to the others he starts with 3 columns: what we own, what we owe, and our value. He explained that in accounting terms, these are assets, liability, and equity. Usually, accountants write this formula as assets equal liabilities plus equity. George explained that most accountants like to break equity up into 3 buckets. One was investments by the owners, often referred to as capital. Another was incoming money, or revenue. And finally, there was outgoing money, or expenses. That changes our formula a little bit so that we end up with assets equal liabilities plus investment capital plus revenue minus expenses. The equation must always be equal. If you change the value in one part, you must change the value in another to balance the equation. If it is not, something is not accounted for, or there's an error. He quickly makes a spreadsheet like this one. Nova finds this fascinating, but wants to get the operations and logistics of the project, so she changes the subject. They'll need to rent a tent at the market. They need to buy ingredients and rent a portable gas-powered pizza oven. Keiko knows where to rent ovens, can borrow a tent and table from her auntie, and has some spare graphic design supplies to make signs. To no one's surprise, George is good with tracking money and will use his spreadsheet to keep everything organized. First, they contribute to the project $250, making a $1,000 initial capital investment. Investments are equity, so George increases owner's equity, increasing the assets to $1,000 cash. David and Nova go over to the store to buy ingredients. After battling lines and crowds at a very busy store, they buy $300 of ingredients with some of the cash. George moves the money from the asset cash to the asset raw materials inventory. Of course, with our simple model, this doesn't change anything since both are assets. To see changes, we have to break the assets into sub-accounts. George splits the assets accounts into a cash account and an ingredients inventory account. Now, the spreadsheet looks like this, with $300 removed from cash and added to inventory. One ingredient David can't get at a store is the Huli chicken. The labor and time to make it from scratch is too much, so he obtains $50 worth of chickens from a friend, promising to pay him back after the event. This is a liability, as he owes someone money. So we're going to increase inventory by $50 and increase liabilities by $50. Finally, there's renting the booth and oven. These two reduce cash, but don't increase assets, since the Huli Pizza Company crew doesn't own them. This is an expense. The rent of the booth space is $300, so we remove $300 from cash and put it into expenses. The pizza oven is $200, and we'll move $200 from cash to expense for a total of $500 in expenses. The team is ready to go to the market. In the days before, David makes pizza dough and preps all the ingredients for the big day. Keiko does some social media promotion and makes a few signs, including one for the Huli Pizza Company, naming their new adventure. Nova and George pick up the oven from the rental store. The booth is a fantastic success, and they sell out a product before the day is done. $5,000 in cash. All inventory is gone, and they are amazed by their own win. George makes 2 transactions, the influx of money and the reduction of inventory. The money is added to cash and to revenue. The reduction of inventory is an expense known as costs of goods sold, or COGS for short. George splits the expenses into 2 accounts to track this better. He makes a new account for COGS, separates that from the non-production expenses such as the rent. He renames this account Selling, General, and Administrative Expenses, or SG&A for short. He reduces inventory by $350 and increases cost of goods sold by $350. While celebrating by munching on a new volcano-looking calzone David has been experimenting with, they discuss their future. They decide that a success like this is too good to pass on. The four agree to try this again. George, however, has a few objections. First, he thinks they didn't account for all their expenses. For example, gas money for moving equipment and buying supplies comes out of Nova's pocket for filling her pickup truck, not out of the capital. He also thinks having cash in a box is an unsafe way to store that much money. He suggests opening a bank account so cash from the business will stay safe in the bank. They might also get a business credit card to pay for many of the items, which would be another liability. Keiko chimes in with an observation about the ultimate newbie mistake she knows many of her artist friends make: not accounting for labor. David and Nova spent a lot of hours making dough and chopping ingredients, and they all spent time working the booth, either selling or making pizzas. None of that labor value got recorded. George agrees and gets to his second point. Everything they're discussing needs separate columns on his spreadsheet. There are two labor expenses: the cost of goods sold and the SG&A one. There's another for the bank cash, and renaming the cash account as cash on hand. They might want to split the expenses into more buckets for gas and office supplies. The credit card becomes a new liability and thus another column for that. And they completely forgot about taxes. George thinks a spreadsheet like this might be big and difficult to read if they add too many accounts, and suggests a transaction list instead. He creates another spreadsheet like this one, showing parts of the transaction. Generally, what increases in the transaction he puts on the left, and what decreases he puts on the right. He explains there's a term for this: debits and credits. For the most part, debits are increases and credits are decreases. Keiko, who's good with databases, looks at this again and sees another way of doing this so they can record many transactions easily. Every transaction is a set of changes to accounts. To make this more flexible, she suggests making a transaction have a name and a number and labeling the accounts in a way that makes them easy to total. The labeling of the accounts is known as a chart of accounts. For example, here's a chart of accounts for what the Huli Pizza Company has done so far, with the numbers starting in 1, 2, 3, 4, 5, or 6 to indicate what are assets, liabilities, investment, revenues, cost of goods sold, and SG&A. Sub-accounts have a number beginning with that account number. For example, cash is 1100. It is a 1000 series account because it's an asset. This is expandable, and all the accounts discussed can easily fit into the chart of accounts. Keiko goes to the next step. She suggests two tables in an accounting database, one to describe the transaction and a second linked to the first with each account affected by the transaction. That way, a transaction like their sales can more easily be tracked as a single set of sales, though it has two credits and two debits. George, Keiko, and Nova get all excited about this. They could take that data and get reports off the transactions easily. First, they could check if the accounts are accurate with a trial balance like this one. David, however, gets frustrated. This has nothing to do with pizza. Nova explains that they can also generate two other reports. One to show how they're using their cash, known as a cash flow report, and another to accurately tell them if they're making a profit, known as a profit and loss statement, or P&L. Using these documents will first give them guidance on how to spend their money wisely. But if they do expand and need investment from others, these documents will provide critical information to banks in order to make a loan or investments for more capital that will make getting money much easier. For example, says Nova, with a mischievous glint in her eye, if they ever buy a pizza truck. David looks thoughtful. After a few months of using a rented oven and Auntie's tent, they decide to buy a truck, which continues to gain a following not only in the weekend markets, but in its weekly spot close to where the four go surfing on the North Shore. Good accounting practices have their bank enthusiastic about lending the money for the truck. As the crowds and the menu of pizzas grow, that leads to restaurants first in Oahu and then on Maui, Eventually, the four and their angel investor Craig decide to bring their pizza to the mainland and do something risky. Put their first store in the insanely competitive market of Chicago. Nova leaves for Chicago to set up and run the store. To see what happens next, check out my course, SAP Business One Essential Training in the LinkedIn Learning Library, as Nova sets up her store with the help of OEC computers. Learn SAP Business One and get an excellent introduction to ERP systems. Meanwhile, David and Keiko are working on a different project, the front end of a pizza menu ordering system for the iPad. You'll build their system in the LinkedIn Learning course, Swift UI Essential Training, also in the LinkedIn Learning Library, if you have some knowledge of Swift. If you've never programmed before but have an iPad, you can check out the course on LinkedIn, Make Apps with Swift Playgrounds, and you'll build another version of the menu board. Finally, to keep with all the adventures of the Huli Pizza Company crew, learn how to paint my illustration here. Get early access to new iOS and SAP Business One videos and much more. Subscribe to my Patreon.